Roni Dersovitz runs the Litigation Settlements Fund. Our group has looked at litigation settlements in every single way, but Roni has a kind of nuanced view of it. And he looks at an area that we don't necessarily look at all the time. So I was hoping that Roni could, kind of expand on what Alan's talking about in the credit markets, why alternative credit makes sense, and then talk, kind of drill down and talk about what he does. What's the market opportunity? What's his, I would love to know more about what your deal flow is. And then, what's the capacity for your strategy? So Roni, introduce yourself, take it away.
Hello, everyone. I hope everyone's doing well, healthy this morning, and thank you for giving me this opportunity to speak. So I am a lawyer by training. I began practicing law in the 80s and as a personal injury attorney. And during that time, I began to realize that the cash flows of contingency attorneys, PI attorneys, personal injury attorneys, were horrific because your litigation would take 3 to 5 years. Some of the more complicated litigations required additional court approval processes, and you could never exactly balance or match when your settlements would occur and when you would need cash. So your assets and liabilities never matched up in a given month. To make it worse, I can tell you one story. Going back to the 90s, I literally walked in to a Bank of America branch on 57th and 5th Avenue or Park Avenue and told my banker that I'm going to deposit a $150,000 check. I happen to need it for payroll, and could I get an acceleration on that? The answer was no. These types of settlements and fees are not traditionally bankable because they're not brick and mortars. So you've got a cash flow issue in the contingency world when you're working on successfuls. You've got income that usually tracks 3 to 5 years behind where you are today. So the work that you're doing today is not going to settle for several years out. And some of the cases, even post-settlement, have an additional drag in terms of when you collect it. So what I realized is that if an attorney can demonstrate to me that he or she has settled a case, that it's payable by an insurance carrier, that they are entitled to a given fee, we could factor that fee. All we're doing is buying cash at a discount. No more, no less. All you have to figure out is how long you expect the tail part of the litigation to take. Now, I started doing this in 97, formed my company in 98, and launched a fund in 2007. What we initially did was focused on cases that required court approval. So we would come in at the very end of the litigation, as you traditionally think about it. There's a settlement agreement in place or an MOU. The payer is going to be an insurance company, municipality, or Fortune 500 type entity, typically. And we would accelerate the fees due to the law firm. What you then have to appreciate is you still have the court approval process. Now, court approval signifies that someone might object to the settlement. Yeah, they do from time to time, and that delays the process. But have you ever heard of anyone objecting to getting too much money? It's very uncommon. Usually what happens during this phase of the litigation is you have what I call a holdup. Someone is holding up the insurance carrier or the defendant to pay a couple more bucks. And since the board has approved the settlement, they're going to pony up some more dollars. So this phase that we're bridging, that typically takes anywhere from 6 months to 3 to 4 years, depending on how long the court approval process takes and how long the administration cycle will take. So an example of a complicated settlement that's going on today that we've originated several opportunities on is the payment card settlement. MasterCard has settled an antitrust case for interchange fees for $5.65 billion. My understanding is that that money is all on deposit. Perfect. I have no real credit loss or risk. Now, if I can go out and purchase a vendor's slice in that opportunity set, I'm buying cash at a discount. That's what we do. What you have to do in a trade that I've described is begin to assess how much the vendor that the vendor is entitled to, how long the remaining court process and administration will take, and then buy the cash at a discount. So, Marty, may I share a screen?
Yes, please.
Okay. So, I'm so sorry, Marty. Do you do that or do I do that?
You do that.
Okay, so give me 1 second, folks. I'm sharing a screen. This screen.
It started. There you go.
All right, I'm going to just try to make it bigger. So does everyone see this page of the presentation 205?
Yes.
Okay, perfect. So when I started doing this, we typically acquired attorney legal fees. So I would approach attorneys, tell them, let me accelerate your fees. You're not bankable. We would typically charge anywhere from 1.5% to 2% a month. And in lieu of waiting for the 6 months to 2 to 3 years that it might take to collect your fees, let me bridge that and factor that receivable for you. But since that time, what I realized is I don't have to stick to attorneys. I could move on to lobbyists that are entitled to share in legal fees in Washington, D.C., for example. What about the claims processors? Imagine the claims processors that are helping administer the opioid settlement. I'm working on one right now. They're going to be paid by the trustee for that settlement. Why not accelerate those fees? It's the same corpus of money. Individuals, consumers, or plaintiffs, they're not extensions of credit. We structure our transactions as outright purchases. Corporate awards, the merchants that I was talking about that typically use MasterCard. Bankruptcy fees. So the point that I'm making here is really simple. If you can identify someone that is sharing cash that derives from a settlement, why not accelerate it? With that said, I will remind everyone that we structure our transaction as an assignment and sale so that we don't have to deal with consumer or corporate usury rates. We structure them as purchases. Our durations are typically 1.5 to 4 years. So yes, it is an illiquid asset. We charge 1.5 to 2% per month. And then we typically pay a coupon to our investors. Most litigation finance entities that you've probably read about are an entirely different niche. They come in during the early phase of a litigation, middle phase, or towards the end, and are betting on the outcome of a given piece of litigation. We don't do that. All I do is buy cash cheap. It's a very simple variant of buy low, sell high. Nothing smarter than that, nothing sophisticated, just buying rights to cash flow, future cash flows. But you have to be willing to deal with the illiquidity. Marty?
Ronnie, do you want to talk about the performance and how that works for you, and what kind of duration you're working with, et cetera? What's the duration of the loans that you're making, et cetera?
Okay, so as I said, we've launched a fund in 2007, tail end. I hope this chart is clear, and I'm wondering if this is a better chart. This one is this compares it to various other indexes. At the opening of this, Marty asked me to compare it and contrast it and comment on what's going on in the world right now. I don't know about any of you in the audience. I can't even fathom to guess what's going to happen in the future. I really can't. Alan was right when he commented that the government is putting trillions of dollars into the economy, has put trillions, will continue, seems like they will continue to put trillions into the economy. Everyone is concerned about inflation and taxes. The one thing that I do know is that you can buy future cash flows at a discount. Period. End of story. The money has little to no credit risk considering who is paying it. Your risk tends to be duration. And like Alan and most of my peers, I'm very happy to collect on a settlement. Over the 20 some odd years that I've been doing this, we've collected over $500 million or so. Our returns speak for themselves, which you can see right here, because there's no variability here. A settlement is a settlement is a settlement. It pays. You can get lost in the nuances of settlements and the court approval process. But the thing that you have to take mind, if you're going to get comfortable with this type of strategy, is A, we're not betting. B, we are simply purchasing cash flows at a discount that are known and predictable. And you have to be able to withstand illiquidity, because occasionally you can have a receivable that you expect to collect in 2 years, collect in 4. So your biggest risk is to return. It's typically not the principal. Marty, is there anything else you'd like for me to comment on?
Well, so when the duration is a little bit longer, is that because you're restructuring the loan or?
No. So we structure our transactions as an assignment and sale. And what we do is we will typically use, if you were to think about our transactions as a loan, putting aside that they're not for the moment, we'll typically use a very low LTV. And that even at an 18 to 24% per annum rate of return that we build into our transactions, we typically apply Murphy's Law. So imagine we're giving someone $35,000 on a $100,000 settlement. Our advance rates tend to be anywhere from 25 to 50% of what expected legal fee is going to be. So we typically apply Murphy's Law. Something's always $1 short and a day late. So we'll double the expected duration. So to answer Marty's question, extended durations typically don't impact our yield because we've built them into our timeline, and we have plenty of runway. Marty?
You had a question from Gudrun in the Q&A. Why was 2010 negative?
2016 was negative because many of our agreements, including myself, were attacked and delayed. We got into some litigation with the CFPB, SEC, and New York AG, and payments were delayed because people thought they could get out of paying our agreements. And since that time, you don't see it on this chart, but you begin to see it on this chart. In the domestic vehicle, we structure our returns as a preferred cumulative return. We made the return back for everyone this year on an accrual basis.
And then there was another question. What's the best target audience for what you do? Lobbyists, claims processors, attorneys?
Anyone that's entitled to a slice of the litigation settlement arena. I have no preference. You've got to be cautious, obviously, about dealing with consumers because regulators tend to get a little upset at you. They don't like the trades. Fortunately, I've beat all of those back thus far. I still have a little bit of that going on, but it's de minimis. If you could deal with corporate clients, so much the better.
Fantastic. Well, listen, Ronnie, this is really great stuff. And, I think that this is a fascinating area, especially, as I said, where other credit instruments are just not performing right now. And, I heard Alan and others speak, and I think that people don't realize the political climate we're in, which is that nobody, with, I think, $50 to $100 billion, pension insurance fund and a $10 trillion liability of pensions in the United States, nobody wants to see a downturn in the market, which could lead to instability in a lot of the pension funds that are out there. And so that has caused a rate repression, I think. That's just my humble opinion. And that's why I think why you're seeing your general credit instruments are just not performing as they have in the past. As Alan said, 16%.
It can't.
In the 1980s, right? But there's a political bent to it, right?
There's a huge political bent to it today because you've got inflationary pressures, you've got taxing pressures, which might make us uncompetitive globally. So, and you've got regulators that are, should I say, running amok. And in that environment, you have to be very cautious. And the safest investment, other than a T-bill, that I can possibly think of is buying cash cheaply. You don't need, there's no guessing. You're just buying cash at a discount. And the worst that happens to you, if you've got control of cash, is you make less than you hope to make. It's to your return, not to principal. That is a risk I will take every day of the week, because at least I know in an absolute term the number of dollars I'm going to come home with.
Right. I've got some great stories on that topic, Ronnie, but I'm not going to get to them right now. Great job, and the company's RD Legal Funding. Ronnie, you're going to put your contact information on the bottom of the page, and we'll email it out to everybody as well. So again, thanks so much. Very important.
My pleasure. Thank you.